Hello and welcome. My name is Gabriela Medina. I'm an investor relations consultant for the private equity and venture capital in Brazil. This program is a joint initiative between the Brazilian Private Equity and Venture Capital Association, ABVCAP, and the Brazilian Trade and Investment Promotion Agency, Apex Brazil, to connect international investors and Brazilian fund managers and companies. The international program contemplates a series of actions whose main objective is to identify potential opportunities to attract investments to Brazilian venture capital sector. One of these actions is this webinar of today. The innovation ecosystem and the Brazilian startup market has grown exponentially in the last decade. In the 2 recent years, the country has accumulated 12 startups with a market value above $1 billion. 9 of them achieved this position as a private company. With 470 unicorns around the world, according to the July 2020 survey of CB Insights, Brazil has about 1.9 of the market and is already listed in rankings of countries with the most unicorns in the world. The first and second place are with the United States and China, respectively. 2020 has been a challenging year for the segment due to the global pandemic. The total investment volume received by the Brazilian startup during the first half of 2020 reached 690 million. 170 investments were made according to Distrito database. PropTech was the sector that received the most resources in the first semester with 180 million, followed by supply chain and fintech sectors. It is interesting to note that the round received by Loft, the only Brazilian unicorn this semester, alone accounted for 95% of the volume received by startups with solutions for the real estate market. For this discussion today, I would like to introduce a conversation with the titans, Anderson Thies, co-founder of Redpoint Eventures, and Eric Archer, who founded Monashees. Andy Tsao from Silicon Valley Bank will lead the discussion. I'm sure the conversation will be productive and interest to all of us. Questions are welcome throughout the webinar at the Q&A button. Andy, please, you have the floor.
Good morning from Silicon Valley, and for those joining us in Brazil, boa tarde. Thank you, Gabriela. Thank you, Chris and Angela and ABVCAP for inviting me to join today's webinar on Inside Brazilian Venture Capital. My name is Andy Tsao. I'm a managing director at Silicon Valley Bank. For those of you not familiar with us, we are the bank for the innovation economy in the US and increasingly globally. Again, I lead our global gateway business, and that is a team that's doing business development in new and emerging tech markets around the world outside of the US. And in fact, the very first market that we started to travel to back in 2012 was Brazil. And fast forward to today, my colleague, Julia Figueiredo, who's our director of Latin America, and Joe reminds me she's from Belo Horizonte, the two of us work with more than 700 clients across Latin America. About half of those are in Brazil. It's been a real privilege for me to work closely with some of the leading companies and investors like our speakers today, and witness the growth and development of the Brazilian ecosystem over the last 8+ years. Just for some context, in 2012, when I first traveled to Brazil, according to LAVCA, there was less than $400 million invested in all of Latin America. Today, in 2019, there was more than $4.6 billion invested, so an 11-fold increase over those 8 years. There were no unicorns, and as Gabriela is describing, at least per LAVCA data again, in terms of venture capital-backed unicorns, there are about 12 across Latin America, 10 of them in Brazil, and 8 which are clients of ours. We have a terrific panel of speakers today. Two of the leading early stage venture capitalists in Brazil, both who I have a lot of respect and admiration for as investors, and that I am lucky to consider both partners and friends. I met Anderson and Eric in my very first trip to Brazil in 2012. So welcome, Anderson and Eric. Thank you both for joining us. And please, why don't we kick things off with an introduction, both of yourselves and your firms. Anderson, let's start with you.
Thank you so much, Andy. It's a great pleasure to be here with you and Eric again in yet another panel. Different times, different style, but once again, talking about our ecosystem, it has been a great pleasure. I quickly wanted to also thank ABVCAP for the invitation and for keeping up the tradition and the service that the Congress does to the whole community and our industry in particular, even during the different times of COVID. So thank you so much. And so quickly about my profile. I'm originally a computer engineer. This is my second career. And like Eric, I'm an early believer in the ecosystem here. I've been acting as a venture investor in Brazil since 2003, which is a few years before our first meeting in 2012, Andy. I can tell you it was even less money being deployed in the industry. And but it has been a great pleasure and an incredible benefit to see the whole industry accelerate through all this period, especially the timing that you talked about. I think you brought us very good luck from 2012 to today. It has been a very, very interesting journey. I co-founded Redpoint Eventures in 2012 with two funds from Silicon Valley, Redpoint and eventures. And what we do is early stage investing. We do investments in predominantly Series A, but we also do seed and Series B. And most of those investments are tech driven and based in Brazil.
Thank you, Anderson. Eric, over to you.
Thanks, Andy. Well, it's a pleasure to be here. I'd like to thank ABVCAP for the invitation. Thank you very much, Andy, for hosting this discussion. Thank you, Anderson. I know it's a pleasure to be working together and helping build this incredible industry, over the last 15 plus years. I am a co-founder and managing partner at Monashees. We are early stage tech VC fund. And we started in 2005, like we like to say, we started running the marathon 5 miles before the starting line. So the market really started in 2010. So Andy's and Silicon Valley Bank's timing was great in 2012. I think that's when things really took off. We focus on early stage companies, seed and Series A. And I at Monashees, I have we're 5 partners and 18 people, that are working to help entrepreneurs, build this first generation of world-class Brazilian and Latin American tech companies.
Well, let's stay on that theme, Eric. In terms of how much the ecosystem's developed, as I mentioned, last year was just incredible in terms of how much capital is invested at nearly $5 billion. And that represents doubling over the last 3 years, year over year, right, to get to the 4.6 billion. From your view, as you say, running this marathon for as long as you have, what have been the drivers of the growth in the ecosystem in Brazil? And from that, maybe you can talk about some of the big market opportunities and illustrate that with a portfolio company in Monashees.
Sure. Well, I mean, it's a very broad topic, so I'll try to be very very short in my answer. Otherwise, I'm sure we can talk for hours here about these interesting topics. when, since we started, I mean, it's interesting to see there were like 3 different phases of the market, between 2005 and 10, nothing happened. So it was a desert. Between 2010 and 15, you had this first wave or the industry taking off, especially because, I think the tech around the world was actually globalizing and venture capital too. When we started in 2005, it was very concentrated in Silicon Valley, but I mean, our bet was that it was going to be global. And Brazil, I've always considered Brazil to be a fertile ground for entrepreneurship and for venture capital. It just hadn't happened at the time. But Brazil has an incredible entrepreneurial energy, as we all know, and a lot of inefficiencies to be addressed by entrepreneurs and technology. So, I mean, the potential was there. I mean, the combination of factors was initially Brazil's economy growing and attracting the attention of international investors as the last of the BRICS that was taking off in 2010. So that actually put Brazil in the radar screen, and the first investors looked at the opportunity of tech. Repatriate Brazilians, moved back to Brazil. I think interesting case was Julio Vasconcelos founding Peixe Urbano in 2010 that we had the pleasure to work together with Julio at the time, and benchmark investing, the first top Silicon Valley bank actually to really invest in tech in Brazil. So that was a combination of factors, and foreign entrepreneurs also moving to Brazil. So that first generation of companies still didn't have access to growth capital, but had access to early stage capital. And so it took a little longer for these companies to take off. In the last 5 years, I mean, the third phase, the 5-year phase that we actually been through, then we had this phenomenon of these first companies maturing. So there was, 99 and Logi and Nubank and all these companies that were founded in this between 2010 and 15, having access to growth capital, because then you had an abundance of capital and liquidity worldwide, and the reduction in interest rates worldwide, and more recently in Brazil, just actually directing more capital to alternative, assets and new asset classes like venture capital. And so this is democratizing access to capital from the part of entrepreneurs. And it happened in Brazil in a virtuous cycle that was incredible, has been incredible. More capital year after year, greater companies, bigger companies in shorter periods of time, higher number of unicorns, as Gabriela was mentioning before. So the last 5 years have been incredible. Fintech, prop tech, marketplaces in general, and e-commerce, and SaaS, and several other sectors. Actually, it's happening across the board. So I don't want to extend myself here, but we can talk more about some examples of companies. Sorry for the long answer.
Oh, no, it's a great answer. Anderson, there's a reputation for Brazil as a large market that, you can build a very valuable company just staying within Brazil, or maybe you can go regionally across LATAM, even with the sort of Spanish-Portuguese divide. But what about the notion of Brazilian companies becoming global leaders? Is that something you aspire to as an investor? And are there any examples that you can point to as Brazilian global leaders?
Oh, for sure. Just quickly, I think Eric described perfectly the evolution of the ecosystem, just highlighting the last 5 years that you mentioned, Eric, were precisely during the worst economic crisis of our history in Brazil, until today at least.
Very good.
So it was a double down on the value of that the tech companies are creating. I think it was really well put. In terms of global companies, I think it was discussion around belief, maybe in the beginning of the cycle that Eric mentioned 2015, we were speculating. I know that Eric and I always believed it. I think today is more of a just pointing to examples. We do have very interesting companies out of Brazil and Latin America becoming global players. I think there are different trajectories. I think starting in Brazil, growing here, learning here, creating big barriers or moats or whatever you want to call it in your background, in your backyard, and then going global is proven to work. I think GenePath from our portfolio is emblematic example of that. There are many in all of our peers as well. I think Movili has done that. You know, today Movili is better known because of iFood, which is mostly a local player, is already expanding. But companies like PlayKids that started within Movili went quickly to Silicon Valley, learned there, and became global plays as well. It's Netflix for kids, and it's doing super well in a lot of different countries. I think are good examples. We also have more and more companies that are founded by Brazilian founders, but are global from the get-go. I think Pipefy, it's a good example of that, which is from the business model, from the ambition, from the very beginning, selling globally, doing a lot of the product placing outside of Brazil. It's very strong in Brazil for sure, but the vision was global from the beginning. The go-to-market was global from the beginning. And I think there is also something remarkable that we start to see, which are Brazilian companies that are growing here, but become example globally. I think one example is Nubank. By many rankings, is considered the best neobank in the world. And there are others from Latin America. Mercado Libre, the largest tech company outside of China in the US, in market cap at least, it was a few weeks ago. So I think, you know, the question of whether we can grow really big companies in our turf is proven out, which is great. I think it's one of the toughest and last milestones for the flying wheel to spin here.
Yeah, and we've got a couple of Brazilians that are launched Brex here. That's certainly making a lot of noise in the Bay Area as a unicorn. Two Brazilian founders, another good example. I guess moving to the obvious, because it's great to talk about the momentum of last year and going into 2020, but we're all working from home, and obviously the COVID-19 has really had a global impact. And so, Eric, maybe starting with you, what has been the impact on COVID to the ecosystem in Brazil? And as you talk about it, maybe are there sectors that are benefiting, and what sectors are struggling? And why don't we start with that?
Sure. Before I answer this question, just wanted to compliment, the great list that Anderson mentioned. There's a couple of companies. One is Rocket Chat, that is already present in 80 countries. It's a Brazilian company from Porto Alegre, communications solution. And Fazenda Futuro, alternative proteins. Brazil has every condition to have a global leader in alternative proteins and plant-based meat, also already kind of exporting to Europe and to other countries. And there's a company in the lines of Brex that is called Vortexa, founded by a Brazilian entrepreneur. It's London-based, and it's it's kind of a energy trading data analytics platform that is really world-class. So you see Brazilian entrepreneurs building global companies and local companies going global. So it is the next phase and the next steps. It's just that it has to happen in a sequence. Talking about COVID, of course, it's a tragedy and a human tragedy, and we all have to be very concerned. But in terms of tech, it is no doubt is creating some tailwinds for many companies and sectors because of the acceleration of digitalization, because of this kind of crazy social experiment that is not voluntary, but people staying at home and remote and in education and health, telemedicine. So everybody, as we all know, you have to access, the world through online kind of companies. And so initially there was a lot of uncertainty of how this would affect, and then quickly, in a couple of months, I mean, we all realized, I mean, this is tech again is proving to be very resilient, and like Anderson noted, these great companies in Brazil were built during the worst recession in history, and now we have actually probably the worst recession in history. That was the worst recession in history until then. Now it's the new worst recession in history, and but it's causing in a different way, entrepreneurs to be very creative. I always say that, it's a privilege to work with entrepreneurs because they are used to work with uncertainty and risk. And so when COVID happened, I mean, we were so positively surprised by the reaction of entrepreneurs in our portfolio that they were like, they didn't spend a minute just stopping, paralyzed with the problem. They were looking for solutions and getting around and pivoting and hibernating if needed, or taking advantage of the opportunities. Like, the famous quote, I think it's Churchill says, don't never let a good crisis go to waste. I mean, it's happening in tech. We see, potential first IPOs, local IPOs of VC-backed tech companies, coming up, a lot of consolidation, M&A. In terms of sectors, some of our companies, and of course, Anderson's companies and Redpoint and other top VCs, we're seeing companies really thriving. Anybody that has to do with, for example, delivery, Rappi, that we are co-investors here, Monashees and Redpoint, Rappi is really thriving. Or we have a company in dark kitchens, Mimic already. It's doing really well. We have Neon, digital banks in general, also just thriving very much. Telemedicine or health companies, we have in our portfolio High Technologies from Curitiba that developed a portable lab for blood tests and developed a COVID test, and it's of course helping during COVID, becoming a platform for remote, inexpensive and quick and fast testing. And many others, e-commerce, Madeira and Pet Love. I mean, so e-commerce, people are buying, even though the market is shrinking because of the recession. I mean, people are buying online, over, buying in physical stores. So it just changed a lot, and a lot of companies have a tailwind. Now, there are, on the other side, unfortunately, some sectors that are suffering, travel and hospitality, of course. Anything that has to do with agglomeration of people, I mean, people getting together, of course, events, ticketing, or beauty salons, or gyms, things, all those things are actually have to reinvent themselves. But, entrepreneurs are very creative and are very resilient. So even those companies, we have companies that were affected, but entrepreneurs are using this time to prepare for when the economy recovers or pivot if needed, but will be even stronger to compete again. And this is affecting everybody, and even incumbents are becoming a bit more affected. So just give you some examples of sectors. It's affecting everybody, but it is a big test for entrepreneurs. But we are seeing also this growth in tech, that 5 years in one, that will actually put Brazil tech industry in another level. And of course, we would all kind of prefer not to have this crisis, of course, no doubt about it. But once it's happening, let's make sure we just help the economy, help people above all. This is something that entrepreneurs also, we are so glad that they were all very, they took care of people in an incredible way during the crisis, which is the most important thing too.
Well, Eric, you're gonna have to tell me after the webinar what Corinthians are doing in terms of getting fans back to the stadium at some point, but we'll cover that another time.
Yeah.
Anderson, as Eric talked about the what sectors are benefiting, maybe you can illustrate that with a investment that you've done recently. Obviously when COVID hit, I think the whole world stopped in terms of venture. We just kind of dropped to a bear market. It was the fastest dropped to a bear market less than a month on record. But we've seen, as Eric said, remarkable resilience. The second quarter numbers for the U.S. showed actually more venture dollars invested than the first quarter. Pretty remarkable. Anderson, could you, are you investing, and can you give us an example of a company you recently invested in?
Absolutely. There is one company that we are also co-investors. It's not from recent, but I think it's a great example of how the companies can, at the same time, benefit from the changing reality and also support the reality, which is Memed, which is a company that we invested long ago, right, Eric? And
yeah.
The interesting thing there is that they were fighting for a long time on the regulatory front and also on the go-to-market, on the commercial front with, Memed does online prescription for medical doctors. And it was something that already made a lot of sense, but it was a very slow adoption. And the phenomenon that Eric correctly described accelerated the adoption in a great way, both on the regulatory front, which something we were longing for 4 to 5 years was, signed off overnight because of the need of it. And also, the drugstores that would see online as a threat, all of a sudden saw it as the only option. So it was very, very beneficial for a lot of companies. I think something really special that we can't appreciate yet is that all the evolutions we had in the past were sort of pulling. We all know the hype curve. So early adopters started experimenting and so on and so forth. And we always had the laggards holding the technology back and making the adoption a longer cycle. What the pandemic is doing is, pulling everybody from behind. So I think tailwind is a very good metaphor. It's a lot of people that were resisting to use the technologies are now jumping in, which is interesting as part of the global experiment, so to speak. But I think it will create a lot of very positive effects and demand for all of our companies going forward. More recent example that I think would be interesting as well is Vituji, which is a marketplace for mental health services. This is a thesis-based investment that we have been working on for a while. We closed the deal before the crisis hit, but the impact was very, very big, precisely because of the situation we are in and the need for mental support during these unique events. So, there are examples abound, as Eric mentioned, on both sides, right? We also have investments in travel that's one of the best management teams we ever had, and they had to react very fast. And it was, and it still is, a hard moment for the company. But in general, I think we are very fortunate. I think working with entrepreneurs, by far the most important part. The other ones working with technology, which I believe is the only consensus globally, is that the pandemic is accelerating the digital adoption. And with the long term that our business grant us as investors, we have the benefit of looking beyond the crisis, whatever it takes to travel. We just have to be very careful, very diligent with the short term, because the future for sure is bright for our portfolio companies.
Absolutely. Eric, one of the impacts of COVID, as you look forward, obviously funding is going to be more difficult for, I suppose both fund managers as well as entrepreneurs, and international investors have always played a big role in that. But as you look across the landscape in Brazil now, do you feel that there's still sufficient capital to fund some of these early stage companies in that both you and Anderson are investing in?
That's a great question. So we've seen, as we were talking before, this first phase, early stage capital is local, even though of course most of the funds actually have international LPs. So actually the origin of the capital, there's a lot of international capital through local funds, but local GPs and local funds are doing the early stage. Growth capital has been almost 100% has come from international investors. And though they drove actually this growth that we all talked about in the last few years. Now, the situation changed this year, and we think it's temporary. But of course, international investors that are the growth investors, they are much more selective, and they are also waiting to see, you know, there's a lot of uncertainty. There was a big variation, volatility with the exchange rate, which affects them. So it's natural. I mean, nobody knows exactly where this is going to end and how long it's going to take. So it's just natural that's happening. It's just delaying maybe the growth of, in general, of the companies. But at the same time, it's like a little bit like premium real estate. We were talking about this the other day, Andy. But premium real estate, you know, you don't have volatility in prices in the premium real estate because there's a lot of demand and not a lot of supply. So there's a flight to quality, and the very best companies, the ones that are taking the tailwind and really growing, there is capital for them. And several rounds are being closed as we speak. And we have several companies in the portfolio getting multiple term sheets, but they're more selective and they're focused on those companies that are more proven and they are in those sectors that of course are getting, you know, positive impacts. For the average of the market, for most of the companies, it's going to be a bit more difficult this year. And until we have more clarity in the market, to raise growth capital, not to raise early stage capital. Early stage capital, all of the top funds actually raised good funds last year and they have capital. So I think will continue to be available, early stage capital. But growth capital, you just have to be careful. Entrepreneurs have to plan accordingly. And we think it's temporary. We will go back to the growth we had before. But one positive effect of this whole thing is that we start to see, and we have a couple of examples in our portfolio, we start to see local growth investors. So local groups that are actually looking at investing in Series B, Series Cs of 20, 30 plus $million that before were all taken by international investors. And now we see local groups that are saying, hey, you know, this is a great opportunity. This is maybe, you know, it's a great company and I want to take that risk. And so it's the same way that is accelerating growth in some of the sectors of digitalization. It's an interesting effect that the crisis is accelerating the creation of the local growth capital pool that didn't exist before. And even like some of the funds have raised opportunity funds. We are actually raising, we just had our closing of an expansion fund to invest in the pro rata of our portfolio companies in Series C plus. So I mean, so you have the local funds also actually raising growth pockets of capital, but also local groups. So it will fill the gap. It's not going to fill the whole gap. It's going to fill part of the gap, and it's going to be temporary. So and it's natural just because of the uncertainty. So that's my reading of the situation.
Yeah, just back of the envelope, if you think of the you know, Monashees and Kazakh, the funds that were closed, raised new funds last year. Then you add, of course, SoftBank that you know, still has a lot of capital in their couple $2 billion Latin American fund. So there's, you know, just by those couple of funds, there are a few $1 billion of dry powder potentially available for investors, in addition to some of the local money that you're talking about. So that's you know, it would suggest that there's plenty of capital available for Brazilian companies. Anderson, you know, Eric talked a little bit about, both of you did, about the Great Depression or recession of 2015 that we just seemed to come through, and now we're, as Eric called it, even a worse Great Depression. But how does COVID compare to prior recessions? You know, what are some of the learnings that we can take from 2015 and apply them to where we are today?
Yeah, that's a really tough one for any economist, let alone a venture capitalist. But I will do my best. I don't know yet how the crisis that we are in really is, but we can already tell it's very different from what we had in 2015. 2015 was predominantly local. It had some of the factors were expected or well known. The prices in Brazil, the relative exchange rate, it just felt. You remember when you, Katie, at the time at Lavica, were walking in close to the first Cuba, and we were like, how can the prices in São Paulo be as high compared to, on a global basis, compared to New York, right? So there was this perception that there was a inflated expectation around Brazil, and some things that were completely unexpected and really bad. I think the moral and the crisis with Lava Jato in particular, with the car wash operation, was very damaging and lasting, and also the impeachment. So we had a combination that was very unfavorable and made what today we use letters to V-shape, W-shape, Y-shape, the crisis very different for that one in Brazil. So it was very profound and very long. And different people have different opinions, but we were starting to get out of it. At least that was the feeling and the impression. And the one that we are in right now is completely different. It's global, it's unprecedented. It is a big experiment in biological terms. We're facing things, in our generation never seen before. The nature of the problem itself, the fact that the globe is so interconnected, make it really special and unexpected. But also the economic part of it, right? It's really different and really tough to precise. It's many countries printing money, giving money away to the population because they are going through really tough times. I think in general, at least in our part of the economy, in March, we were expecting a much more profound impact in valuations, availability of cash, revenue of the companies than we are actually seeing. So it's really hard to precise whether it was milder because the experiment printing money worked, or because we still have to see how it's gonna unfold from here. So there is a lot of uncertainty still on both ends, right? How the economy is going to react to everything that is happening. And also we could have second waves and markets closing again. So I think it's completely different. The biggest lesson learned is the value of money, not only in absolute terms, but that meaning runway. The companies, the startups that have access to capital today and the ability to form a good war chest to weather these uncertainty times, it's very clear that the future will be really good. We just have to make sure we plan correctly, and preserving cash in detriment of growth right now, it's still a wise option in our view.
Absolutely, Anderson, and I guess just drilling it to the startup part of the ecosystem that you guys operate in. There are some pretty incredible companies that were built and continue to grow during the last great recession. Do you think that'll carry through? History would suggest that in these times of crisis, this potentially might be one of the best generation of companies that you'll be investing in.
Sorry, you broke up a little bit, Andy.
Oh, sorry, Eric. I was saying that with respect to the ties to the macro conditions of the economy, just pulling it down to the startup ecosystem, we saw certainly during the crisis of 2015, some fantastic companies in Brazil continue to either be created or to perform. Do you think that's going to continue even in the uncertainty of this crisis?
For sure, for no doubt about it. And actually, even in a way, even better from an investment standpoint, because valuations will be more realistic on average. I don't think valuations will be that attractive for the very, very best companies because the reasons we were talking before. So that the very best companies will command, valuations that will be fair. I mean, but at the high end of fair, and on average, I think valuations will be more attractive now because we were already actually the second half of last year with everything that happened and WeWork and the whole kind of market reaction to high multiples on tech-enabled companies. We already saw a little bit of a correction on that. Companies focusing, which is very healthy, focusing more on unit economics and path to profitability. And this is going to accelerate now. And I think it's good for everybody. And another effect is that even though, I mean, it was very good that there was a lot of growth in the market, we can't deny that there was a little bit of overheating and hype. And the hype actually ends up attracting a lot of entrepreneurs and investors that are not starting companies or investing for the right reasons. They're doing it for fear of missing out, the FOMO thing. I mean, I want to be an entrepreneur too, but they don't even stop to think if they are entrepreneurs or not, because everybody wants to be, because everybody is an entrepreneur. And the same thing with angel investors and investors. Everybody's saying, I can't miss this. I want to be part of this, but they don't stop to think, hey, it takes time. You have to be patient. There's a lot of risk. You have to build a portfolio, to invest. So that was happening a bit in Brazil, and now I think it's going to be better because you will have the real authentic entrepreneurs and the real authentic investors that will actually take more of the have an even more significant presence in this market. But no doubt that overall, I mean, if you see in the US and over time, some of the best companies are built during crisis. Because of not only, the valuation is the investment standpoint, but on the entrepreneur standpoint, you have more access to talent because you have more people available and salaries are also better. And you also have more, new inefficiencies actually show up and pop up, to be addressed. And incumbents also get a bit more fragile to compete. So a lot of factors that actually make this, that's why entrepreneurship and venture capital are so resilient, and there's no correlation with crisis because you can do it at any time, and this will be a special time.
Yeah, history would suggest in terms of venture capital returns, this might be one of the best potential times to be an investor. So I'm going to put the audience on notice here to please, we're going to turn to audience Q&A. You can do that through the Q&A panel. I see a few questions in there, but I'm going to ask one more question of the guys, and it's been a really interesting phenomenon or trend to have observed over the 8 years that I've been active in Brazil. As back in 2012 when I started with both of you guys, you were both very Brazil centric, and I would ask you about investing outside of Brazil, and you'd say, well, this is kind of where this is where we understand the Brazil dynamic. Now, fast forward again to where we are today, both Redpoint and Monashees are investing across the region. So I'd love to get your insights on how you see investment opportunities in other parts of Latin America. How do they tie to your investment thesis at both Monashees and Redpoint? And maybe Anderson, I'll ask you to start.
Okay. So I think Eric will actually be a better place to talk about it. They have a bigger portfolio and pick up broader strategy. we remain very much focused on the Brazilian market. We do see a lot of opportunities in Latin America. Our thesis for investing in companies outside of Brazil is typically companies that plan to have Brazil as an important part of their expansion plan, because that's where we believe we can help the most with the setup that we have. We have made only 2 investments so far in the rest of Latin America, and many of them are regional, but we have Happy in our first portfolio, which is a co-investment with Monashees, and Oyster in the second one, which also is. So we are holding hands for Latin America. I think great companies are being built. We have another investment. It's not based in the region, but it's global. Will be announced in the next few weeks. But we are still experimenting with international expansion. The reason why we started Redpoint Eventures here, that are firms that have presence elsewhere, our style is more of a local approach. We have sister funds in China and Japan and Europe and the US, obviously, that look locally at each of these platforms. But for Latin America in particular, I think we're going to see a very, very interesting vintage of companies already coming. In many ways, Colombia and Mexico are a little bit like Brazil in 2012. You know, capital coming, great entrepreneurs, good examples, and I don't think it's going to take the same time to catch up. So I think we'll see more and more fantastic companies coming out of new hubs in the area as well.
And Brazil remains the biggest hub for venture investment in Latin America, but as a percentage, it's getting smaller across Latin America. Eric, did you want to expand on that in terms of your investment activity outside of Brazil?
Sure. No, it's great. Actually, our first investments outside of Brazil in Latin America happened in Argentina. When we started between 2005 and 2010, if you remember, Argentina actually produced the first unicorns in the region, and the first cycle and the first wave of tech, you know, late 90s, early 2000s, no, Mercado Libre and Despegar and Globant all came from Argentina. So we basically went there to look for opportunities, and so invested in a couple of companies in 2008, 2010. We ended up investing in Satellogic more recently there, and even more recently in Ualá, you know, the digital bank, which is doing incredibly well and expanding to Mexico. But we basically saw Argentina as potential. Unfortunately, as a country, I think the macro problems of Argentina were off limits on the impact on tax. So Argentina actually ended up kind of missing the opportunity to lead the new cycle of tech. So that actually happened in Brazil. So we focused on Brazil, and it's the powerhouse of Latin America. But starting in 2016, you know, with our investment in Rappi, and Anderson knows very well, it's an incredible company. Actually, Rappi helped create the tech ecosystem in Colombia. And so we had access to other great opportunities like Frubana or like Adi or Cheaper and a few others. And we decided to spend more time in Colombia. And Colombia is an incredible tech hub today in Latin America. Even though it's not a large local market, entrepreneurs are very ingenious and very ambitious, and they look at the region to expand. So we're very happy with our presence in Colombia. And then more recently, starting in 2018, we looked at Mexico. We said, you know, trying to, you know, seeing that things were going well there and an ecosystem was developing, and we had access to great opportunities. So we built a portfolio of 5-6 companies, you know. Oyster, as Anderson mentioned, we're just closing a new great investment in Mexico. So these are the countries. We're still waiting to see things coming out of. I mean, we should be seeing things coming from Peru soon. I mean, the tech ecosystem is starting to develop there, and maybe Chile. But These are the countries that we're looking at in Latin America. And as Anderson said, they followed kind of waves. Brazil was the first one. Argentina was this kind of, first cycle, and then it didn't replicate in the second cycle. Then Brazil took over, and then Colombia and Mexico developing, and hopefully other countries will follow suit.
Yeah, to your point, Eric, there's a growing connection with founders from Colombia and Y Combinator here in the U.S. Quite a number of entrepreneurs spinning out of Rappi to then start new companies in YC. But let's go to the Q&A again. For those in the audience, if you have questions, please enter them into the chat, and we'll start with a question here from Rodriguez. Is healthcare the next big wave in Brazil? Besides digital health, is there appetite for deeper science companies, life science like biotech, new molecules, etc.? So who wants to take that?
I can start, and you feel free to chip in, Eric. Yes, I think health is a great vertical and very promising, and we were already talking about it way before COVID. It is, typically people would ask, oh, fintech was the first one. What is next? Is it health or not? I think fintech is still in the beginning. I think we're going to see a lot of things happening there still. But the situation for health was completely different. Fintech, the Brazilian financial services in Brazil are very good. They were created very efficiently for not really noble reasons. We had hyperinflation, but it had to work, otherwise the country would collapse. But we were leaders in tech for the financial services, and still are. We still have very interesting things working there, but a lot of opportunity to bring new services and so on, and more efficiency as well. Health tech is a different ball game. It is a segment that it's a global problem. In Brazil is no different. I think it's actually worse in some of the developed economies, but the health system in Brazil, the health industry is in the brink of a collapse. All the parties are complaining about the industry, and prices keep skyrocketing. And it was already the spotlight for efficiency. So technology can unleash a lot of value in the health sector. And now with COVID, even more. There is a lot of light on this industry. All I'm talking here is what we believe we understand well. It's the use of technology, meaning connectivity, mobile, internet, applied to businesses on the health sector. Part of the question is about biotech, right? And hardcore technology on the bioservices. We are completely ignorant of those. So, my intuition is that there is room for a lot to be built, but we don't invest, and we can't really judge. But intuition is yes, probably.
Eric, anything to add to that, or?
No, I think Anderson covered. We agree that health is huge and inefficient. And the only thing I'd say about biotech is that it's a totally different type of risk, because it's a pre-market launch risk, and depending on research. So we're not familiar with that type of risk, but there is potential, of course.
Yeah, it's interesting because both in U.S. and China right now, life science sector is pretty hot for those reasons, because it's not it takes so long to develop some of these products that it doesn't matter what the external market's doing right now. So, but let's go to the next question, which is, let's see. Okay, as I understand the question, what are the challenges for structuring venture capital investments through investment funds in Brazil? So I think we're talking about a more real denominated, like FIPPs, that type of structure versus international funds. Anderson, you want to
start?
take a crack?
Well,
or Eric? Okay, go. Please.
No. Whatever.
I was just smiling here because I was remembering Eric in the beginning of the conversation. Oh, we could talk hours about it. Yeah, we could talk hours about this topic alone as well. It is.
We can. Well, I can talk very briefly, and I'm sure Anderson can really complement and expand. It really, I think it depends a bit on the LPs. Ideally, if you're only investing in Brazil and you're thinking about returns in reais, it makes a lot of sense to structure locally. And if you have LPs local, it's also, I think there's a lot of interest in venture today. Now, when you start to think internationally, if you have international LPs, having a Brazil structure will create a little bit of a friction to fundraise internationally. Not impossible, but will, because there are more international investors will be more willing to invest in jurisdictions that they understand and they know. And the Brazilian legal structure for venture, sometimes, I think we're evolving, but it's not perfect in terms of the technology of contracts that exist for options and for other things. So I have to think carefully, but it really depends on geographically. Also, if you have a local fund investing outside of Brazil, also could create some frictions. So it's just a matter of like how easy or difficult it's going to be or bureaucratic. You can do it, but you have to think about where you're going to invest and who your LPs are.
Anderson, anything to add to that, or?
No, I think that's pretty much it. And it's where the money is coming from, where it's going, and also co-investors. I think it was harder before. The framework is far from perfect. We have an inefficient legal framework that was developed for the private equity industry. And it's already bad for the in my opinion, already bad for the private equity itself. And we are using that for venture capital. So it's far from ideal. It's highly regulated, doesn't contemplate a lot of the needs that the startups actually have, not the reality that, at least for the time being, probably for a long time, the best companies, which is the ones we should cater for as well, will raise capital from foreign investors that should feel comfortable with the structure that the companies have. So it still has a lot to improve, but I should say it improved a lot in the last few years. Before it was, I think 2012, when we started Redpoint Ventures, it was a big divide. Either you had a FIP and you invested in a SA in Brazil, and that was your destiny, or you had offshore funds that would invest in what today is more the standard. Right now, you have more flexibility. You can have parallel funds and raise, that's what we did. We raised money from international investors in an offshore vehicle, from Brazilian investors in a FIP here, and these entities co-invest. But it's not easy nor pleasant, and I think it's distracting for us as managers, but especially for the industry as a whole. We have a long way to improve on that.
Well, perhaps it's something that ABVCAP can be helpful with over time. And we're basically out of time in terms of the today's webinar. I did want to end it on a very Twitter question here, which is to both Anderson and Eric, just in terms of the opportunity for investing in Brazil today on a scale of 1 to 10, 10 being the highest. Where do you see the opportunity? In one sentence, what for that particular answer? Eric, why don't we go with you?
So I'd say 11, as I always say, from 1 to 10, and the reason is that it's just the beginning, and there are for an entrepreneur, a problem is an opportunity, and Brazil is full of opportunities, as we all know.
Anderson.
Yeah, nothing to add. I would pull the very same joke. I think it's you know, if you grade, especially if you grade based on the past, right, Eric, the recent past, for sure, it's a bold 10 for sure. It's
maybe a 12.
It's gonna be great. Yeah.
All right. Well, thank you, Eric. Thank you, Anderson. Great comments as always. Thank you, everybody, for joining. And again, thanks to ABVCAP for today's webinar on Inside Brazil VC.
Thank you, everyone. Great pleasure.